From Barangaroo Studios, this is the COB, brought to you by eToro. Invest in ASX shares with $0 commission.
Well, hello. This is the COB, all the stuff you need to know about the day in business and markets. And it's a Friday. I'm Nadine Blaney here with Danielle Ikeye, who is the yin to my yang.
Yeah, I thought this was, how did we manage this time? We didn't even consult, guys.
No. But look, one of us could have been wearing green because I do believe that we've got a little bit of green on the screen as we head toward the formal close.
Absolutely. Looking like it's, just over 0.3% higher on the CBO 200. I've got the ASX almost the same, about 0.33% up today. And following that US lead, nice to see the market moving up. Information technology going on a real run today. That sector leading, and then materials, because we're continuing to see iron ore prices move up. But we might cover that in the themes.
We will. Well, let's get there, Danielle, because, the ASX is higher. We had some data from China. I think that's one of the themes of this week, continuing to disappoint. So we had those producer price, inflationary index coming in, but it didn't seem to dent sentiment here. I was sort of starting the session thinking if it came in below expectations, we could be in for a bit of trouble, but didn't come to fruition.
No, so the numbers were basically, I think the CPI was broadly in line. PPI was weaker than expected, but at the moment the narrative is very much the traders trying to focus on, we're going to just push the authorities in China to start stimulating. Basically, that seems to be it. The fundamentals look awful. The traders are saying we're not having a bar of it. We're going to buy iron ore futures and push up the prices there. So really didn't have much impact.
No, and I think iron ore has been a feature of this week. I'm writing the weekend newsletter right now as per usual. And one of the key themes obviously has been China. Iron ore, retailers this week here in Australia, which we'll talk about, no doubt, throughout this next 20 minutes or so. But I also thought, this S&P 500 bull market, Danielle, I mean, is it to be believed? It's
I don't know. That was really interesting, chatting to Carl Capolingua. And what I thought was striking, yes, technically it starts to look like a bull market, but the point he made is that a lot of the investors are rotating out of the big FANG stocks that have run really hard into the Russell 2000. But he talked about the VIX versus the skew. And to cut it right down to the chase, the VIX is suggesting volatility, so the fear index is right down, but the skew, the hedging into the future, is going through the roof, which basically means people are saying, everything's great now, but I am buying puts galore because we're really worried that there might be a black swan out there because of rising interest rates, etc. So, as I said, I think faites attention, as the French like to say. It's, you just got to be a bit careful this year.
You're really pulling out the French today, Danielle.
Well, let's start there.
I like your point, but, you are somebody who has been invested in Tesla in the past. I'm not sure if you still are or not, but it's been on a run as well as this Magnificent Seven. So Google, Meta, Amazon, Nvidia. Oh, now I'm testing Microsoft, and what am I lifting? All of those have been really responsible for the S&P 500 rally.
Even Carvana is running.
Yeah, but Tesla has made exponential gains. It's the longest winning streak for couple of years, 10th session in a row. Can't remember just off the top of my head, but I think the share price is up 90%.
This year 90% has just, actually I wrote about it for the View. So there we go, great minds think alike. Up 35% in the last 3 months, up I think about 14% in the last week. So it looks like Elon is back on the case, looking after Tesla. He's got the CEO at Twitter. Everyone's forgotten about that, self-emulation he was doing, basically, trying to explode himself, talking about new gigafactory in Spain. You've got GM and Ford coming into the supercharger network in the US, which means the Tesla one, which means Tesla can access the money from the Inflation Reduction Act. So really people are looking past compression in margins, maybe some declining demand, and looking forward to Musk wanting to achieve that 20 million EV target by 2030.
Lowering the price point, saying they're going to advertise, there's still tax credits on offer. So I just thought that was interesting to start start this session. Look, you mentioned, Danny, that information technology was one of the best performing sectors, and I think it did win the day. If we take a look at the finish there, we've got, plenty of enthusiasm for WiseTech. It's up by 2%. And we've got Xero up more than 3%. So that's a really solid performance coming through.
Yep, very much. Lots of buying following NASDAQ. Again, as soon as you see those yields start to move down off the back of those unemployment claims, literally the money just races into those longer dated assets at the moment. So still a lot of interest there. And also, what do we have? Energy was underperforming.
Yeah, energy. So we saw oil prices down about 2%. I had a good chat today with Stuart Glickman from CFRA. Look, he reckons 70 US is probably where oil should be sitting. He said that if it weren't for the news last weekend from OPEC Plus, you'd have a 6 handle in front of it. It's worthwhile going onto our website, ausbiz.com.au, if you're listening to this in podcast form, and just checking out that interview, because there's this whole supply demand dynamic, but really oil prices, in his view, are reflecting the very real concerns about demand destructions. Forget about what the EIA is saying. They're expecting demand to come back in the second half. He's saying it's unlikely, and what we're seeing from OPEC and the Saudis is just an expression of the fact that demand is falling. Look at me picking off fluff on my black shirt. Anyways, there was not a lot of corporate news today.
No, very thin on the ground. Everybody's gone on holidays, I think, judging by how empty you could, blow a cannon out down the streets today.
Totally. But it was a big week. We had the RBA hiking interest rates, of course, and I think retail was one of the key themes of the week. So we had that baby bunting downgrade. We had a lot of the brokers weighing in on the retailers.
Lavisa really falling
today.
Just generally this week. I don't know what it did today.
More so today, because I think it was Bell Potter cut its price target. And that's my point, is that we've had even some of the quality retailers, being tarred by the same brush. We had Goldman Sachs downgrading Premier Investments. It was the stock of the day yesterday on the call. So listen, the stock of the day today was Avita Medical, because I spoke with the CEO this morning. Share price is doing good things. In fact, out of the medtech biotech space, this is one of the performers. Got another tick from the FDA. Let's listen into what Claude Walker and Mark Gardner had to say.
I would say, they will probably lag or fall back to the pack a little bit, as the revenue would disappoint in the next couple of reporting quarters. But I think long term, you probably want to be buying on a dip on this one overall. Same with Polynovo. They had record sales yesterday, 2 days ago, of 7 million in a quarter, and I think they were bragging about 5 million at the start of this financial year. So they're expanding into Asia and into Europe. These guys will probably follow a fairly similar pattern. And both have got pretty decent management teams as well. So look, either or both, to be honest. I think they've got high prospects, and even in a recessionary style market environment, biotechs that are about to go cash flow positive, or that do really well as defensive. So they're probably two fairly all-weather picks as well, but they will just gradually improve over the next year or so.
So I think a net loss of 9 million in the last quarter. So I see Avita as a little bit risky, because as Mark was saying, the biotechs that are cash flow positive or about to be can be safer, but I don't necessarily think these guys are quite there yet. So for me, on a fundamental basis, it's a little bit too early. But if you wanted to be like a bit more aggressive and take a little bit more risk on that, I do actually think this is one that will make it in the end.
So other than that, and as far as corporate news today, we know that more of the big banks are passing along that 25 basis point hike in full to mortgage holders. We knew that was going to happen, didn't
absolutely. It's only, a matter of days.
And then we've got the FOMC next week. We're getting ahead of ourselves. Let's welcome in Jason Tay from Vertium Asset Management to the conversation. Jason, hey, how are you feeling as we end this session here on this Friday afternoon before a long weekend here?
Yeah, no, I'm feeling good. I think, it's been a good week for us, I think. No, but it's about trying to survive these times and avoid these retail bombs out there.
Oh, Jason, you hit the nail on the head. So I think you've got an interesting story to tell for us about what's going on with, obviously, Newcrest Mining is under the takeover bid from Newmont. So we're going to get some Newmont shares listed on the ASX. Is that the outcome? And is that something that you'd be looking to buy?
Yeah, so basically, as part of the deal, Newcrest would be replaced by Newmont CDI shares. So effectively, the primary listing is still in the US, but they'll have a secondary listing here in Australia. So that's going to happen by the end of this year. So the million-dollar question is, if you are a Newcrest holder, should you continue to hold on to it? And the way I sort of see it, I guess, this chart actually shows you how Newcrest has traded from a enterprise value to EBITDA ratio. And in fact, just before Newmont made a bid, actually, Newcrest was trading on close to its all-time low in terms of multiple. That shows you how bearish the market was in terms of sentiment, right? You have to go back 20 years, back to 2001 to actually see that same multiple. Before gold went on this massive run, and then once it went on this massive run, Newcrest traded on very rich multiples. So anyway, the Newmont story, because Newcrest is effectively no more. I think they've obviously given the go ahead, and you are effectively buying today when you look at the Newcrest share price is Newmont, right? Because they will track 1-for-1 with that share price in the US, which is why when you look at Newcrest share price today, it hasn't moved because last night Newmont didn't move that much. So going forward, when you look forward in terms of whether Newmont's a buy or not, I believe so. This chart now shows you Newmont's enterprise value to EBITDA ratio. Now, it didn't get to as low as Newcrest in terms of how low it got to, but from a sentiment perspective, these valuation multiples show one thing. There's not much bullish sentiment actually in the current valuations, and in fact, Newmont has actually underperformed many gold miners as soon as they announced the takeover of Newcrest. So that's a good start. Your starting point is actually quite low, and ultimately, when you buy any commodity stock, you obviously have to take a view on the commodity price, and the uncertainty around the fact, especially towards the tail end of a rate cycle, is actually setting up conditions for gold to outperform. And obviously for the last few months, you've actually seen gold perform quite well. And obviously for the next few years, if gold performs quite well, it will drag Newmont with it.
All right, so that's gold. And are you of the view that we are in a gold bull market and that will inspire even more M&A at the small end? I mean, I know that's big end M&A, but small end as well?
Now, it's very difficult to actually take a view on some of the small ends. Like the typical strategy, especially in the small end, especially in Australia, is they actually buy, I guess, secondary assets from some of the larger players and try to consolidate them and get bigger and bigger that way. Typically, the M&A that occurs, typically are tier 1, tier 2 assets, and most of it's pretty much gone. So I think the M&A wave is going to be sort of hard to see, compared to the last decade or so. So I don't think that may happen. But tell you what, if the gold price does rally, everything's going to be lifted up with it.
I think that we got ahead of ourselves just jumping into, excuse me, Newcrest and Newmont, because the basis for this, your presumption that gold will do well, has to be what's happening in rates. And we've got a big decision looming next week from the FOMC. So give us, set the scene. What do you expect?
Yeah, so I think you touched on that a little bit earlier when you talked a bit about the iron ore price. Like bad news, in a way the market's trying to interpret it as good news. Like you had bad Chinese data and the market's anticipating that obviously China must stimulate. And in fact, last night, when you think about the analogy to the gold space, last night the US market had initial claims data coming out, showing that there was a spike there. So again, bad news. But that was a signal to the market that, maybe rates will come off, right? Maybe the Fed next week would pause the rate rises after the raise. That could be the last time in terms of this rate cycle. So from a forward-looking point of view, if they do, pause, right, because conditions are getting worse, because unemployment data is actually, deteriorating through time, that could actually set the scene up for gold to continue to run higher.
Absolutely. I mean, we really do see the sensitivity, don't we, Jason? Every time, bad news is good news when it comes to yields and stocks at the moment. So it'll be really interesting to see what happens, because some of our guests are talking about a skip rather than a pause, but who knows? Data could deteriorate quite quickly, and obviously, the Fed could decide to back off. Is that how you see them going, being just very, very data dependent?
Oh, absolutely. I think the market really is hanging on every single data point as well. So the initial claims, they come out, pretty frequently. And to date, to be honest, their increase so far has been pretty tepid, but it is increasing. But that was actually last night was actually a decent spike up. And typically, in an economic slowdown scenario, once they begin to spike up, they continue in that direction. So it snowballs, in terms of, the way people still claim unemployment benefits. So yes, the Fed will be looking at that data point, but across the board, I think across the United States, you can actually see more states with rising initial claims and rising unemployment.
Jason Tay, thank you so much for joining us to wrap the week for TM Asset Management. We'll see you soon.
Thank you.
Let's wrap this session, shall we? Everybody's getting ready for a long weekend, let's be honest with ourselves, bringing up the leaders of this market. And you can see there nickel mines.
Yes.
We had nickel mines. We still have it as, it's actually called Nickel Industries now. I've got to get that changed. Share price up a really hefty 12% after it announced a conditional placement to United Tractors that has been agreed. So this is raising about 943 million Aussie dollars. So that's a 27% premium to its last closing price. So yeah, a cash injection to allow it to continue and expand. It's in the pig nickel area, but it does have a big Chinese partner. So yeah, one that we will be watching.
Interesting. It's Imugene back, well, it had been sold off, but that's back finding some love. And then obviously we have a bit going on in the gold sector, iron ore, Champion Iron Ore, very much benefiting from those rising iron ore futures. I think it's a higher cost producer, isn't it? So the more the iron ore price goes up, the better off they are. So yeah.
Imugene's been a good one because they've had a lot of trial results and test results and announcements coming out lately. It's actually quite hard to follow all the announcements, but it's got a phase 1 mass trial that's evaluating the safety of its novel cancer-killing virus CF33HNIS. I think I said that right.
Yep.
Progressing to the next cohort. So that's to the intravenous arms of monotherapy and combination. Look, it's hard to track what biotechs do at the best of times, but all we know is Imugene has had a lot of news flow as of late. On the flip side, though, Danny, let's take a look at what's lagging.
Well, as we said, Lovisa is still under some selling pressure. I'm not aware.
It had a broker move out on it. So we've got Bell Potter cutting its price target more than 6% to $30.50. But put that in perspective, right? It's trading at $18. But I just am getting the sense, this week in particular, that it's not, there's no place to hide. In retail, and even if there hasn't been a downgrade, which Lovisa has not, they're getting caught up. It's just not going to be easy for any of them, and that includes Harvey Normans of the world. But I would note, when I was hosting the call one day this week, I said, Lovisa, I did get an email from them while we were on air. Wasn't a sale, wasn't an end of financial sale email. Well, guess what started to come from that day on?
Oh, really?
Lovisa sale emails, into my inbox. And I know it's end of financial year, but all of these retailers are going to be under a lot of pressure.
Absolutely. And I was just checking. I can't see anything for Lake Resources
or
John Ling Group either, but a bit of, selling pressure going on there. I don't think there's anything either in Lend-Lease that I'm aware of.
But we did have a note out from Morgan Stanley saying that investors should brace for downward pressure on commercial real estate in the earnings season. You know, that's pretty much upon us. So it did have a conference going on for Australian companies this week. So it did feature a panel of real estate executives from Charter Hall, Centuria, and Brookfield. And yet Charter Hall said that you can't have a circa 4% cash rate without a negative impact on discount and cap rates. I mean, that's just stating the obvious, right? But perhaps it's we learned this week. You know, the RBA surprised us. BOC surprised. I mean, market is still pricing a pause for the Fed, but we've got inflation data to get through between now and then.
Absolutely.
Some of the medium to small caps, I think we've got them. No? Yep, let's bring them up, see what's happening. Galileo Mining, a Star Pharma CEO actually.
Yeah, didn't she resign or was she stepping down?
Yeah, which surprises me that the share price would be up. Flipping the page though, taking a look at some of the laggards and bet makers, undergoing a strategic. I wonder if just some of the AI enthusiasm came out of Appen today.
It looks a little bit that way, doesn't it? And Bubs, isn't they having a bit of a public spat, aren't they, in terms of who did what?
Former founder, former CEO, there's a bit of a mess there happening, but we'll be watching that one with much interest. Okay, let's just take a look at what maybe we can expect tonight. And I don't think there's a lot.
So Eurozone, May CPI, University of Michigan, June consumer sentiment over in the US. So really not too much. But it is a big week next week. And when I was kind of updating, I think we have next week's. I actually only did on the Tuesday because we have Australian jobs, NAB business survey, US inflation, FOMC, Bank of Japan. I think that's actually more about what's happening next week. So it's really, really big, isn't it, Nadine?
I'm glad we've got an extra day to get ourselves ready for it and all, right? Look, it's going to be a big one. I think that jobs read. It's definitely still a very tight labor market, but I was reading some analysis from CBA today saying that there are signs of softening. It's just that the population growth is something that will probably keep that unemployment rate steady at about 3.7%. And FOMC, I mean, will they, won't they? We're going to be talking about it a lot.
Absolutely.
So look, I've already referenced this on air, but just before we go, another shout out to our chair and our host extraordinaire, Kashi. 21 years at the helm of Sunrise. I would imagine everybody, that's all his family. I imagine everybody's partied out by this time today. That was at the end of his last hosting gig at Sunrise. We just want to say congrats again, David, Kashi, and cheekily to say, so it's not Monday that we'll see you in the newsroom, but we look forward to seeing you bright and early on Tuesday.
Absolutely. What a big day for him. My gosh. Emotions running high everywhere.
It was such a good send off. I don't know if you got a chance to watch any of it, but look, we're very happy for him, very happy for his family, and we're looking forward to all that's to come.
Absolutely.
Just a final check-in on the market. I know our viewers like us to just keep them updated, and listeners, I should say, on where we ended, and it was a positive finish. I know, stop it.
No, my computer. Oh, there we go. I've got the ASX 200 up 22.80 points, 7,122, and the CBO 200 up 4.76 points, and both up just over 0.3%. So I think we'll take that on a Friday.
We'll take it on a Friday. It's really nice to see some green on the screen over the week, over the 5 trading days, down by about 0.3%. But it was a big one, wasn't it? RBA surprising. Hey, look, if you've missed anything throughout the week and you have any time on the weekend, everything's up online, ausbiz.com.au. I hope you have a good weekend. I hope you have a good weekend.
Yeah, and absolutely to you too.
The COB is brought to you by eToro. Invest in ASX shares with $0 commission.